You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MATURITIES, one of the fastest options platforms in the world. MATURITIES is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.myaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is 1 p.m. Central. It is 2 p.m. Eastern. Do you know where volatility is? Let's go find it together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on this fine network, and, of course, upon which you are listening to Volatility Views, the premier program for volatility traders. If you like what you hear, keep those reviews, keep those comments, keep those questions coming. We'd love to hear from you in all various fashions and on all different formats. You want to hit us up on social media, on the website feedback form, via email, however you'd like to hit us up, via the live chat. We do love to hear from you guys. And again, keep those reviews coming if you like what you hear, because that keeps new people discovering the program, which is even more important these days in these crazy, tumultuous times that we find ourselves in today. Our friends in MATURITIES busy getting those futures rolling down the pike to you, so they won't be joining us today. So doing a bit of double duty from the old option pit land, as well as holding down the MATURITIES hot seat. We got the greasiest of meatballs, soon to be, I don't know, the most Texan of chilies, Mr. Mark Sebastian from optionpit.com by way of Carmen Lyon Capital. Mr. Meatball, welcome back to the program, sir.
Hey, yeah, you know, when I'm in the MATURITIES hot seat, I'm cookie, and when I'm in the option pit land, I can be the greasy meatball, and then we're perfect. So we're doing great. It's good to be here, and good to talk a little bit of volatility.
All right, then let's do it. Without further ado, let's head right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Welcome to the Volatility Review, the portion of the program where we do what the man says. We follow the week that was and analyze it from a volatility trading and trending and analysis and unusual activity, all the different perspectives, the cash, the underlying, the spot, the futures, the options, all the good stuff in between. Throw in some maybe ETPs you like, as well as a growing cadre of earnings vol this season. We got a lot to talk about. Coming into showtime, you know, it's It's another one of these weird days. I don't really know what to do with myself. I'm not sure what to do with this crazy color on the screen. I'm not used to seeing this red on the screen, yet alone 2 days in a row. I'm aghast. I'm a Twitter here. I'm not really sure what to do with myself. The bull apparently taking a bit of an extended hiatus here to round out the week. It was another week where we saw kicking it off, and it seemed like most of the news was pretty dire coming out of the weekend, but there was a few glints of light, a few beams of sunshine beating through the fog there. Of course, some hope, optimism on the vaccine front, which is always good. Of course, lingering international tensions with China, that's not good. Growing jobless claims numbers and other issues on the economic front, lots of growing shutdowns across the country, that's not good. But the markets seem to be clinging very narrowly to that vaccine optimism, and of course, a few decent earnings smattered in there as well helped to lift things up till the last few sessions, when all of a sudden we started hitting people in the face that maybe things aren't exactly rosy, and we're seeing that again out there today. Coming into the start of the show here, we're seeing the Dow off almost 0.6%, the S&P similar levels, right close to 0.6%, and the NASDAQ down ever more slightly than the S&P and the Dow off, actually just ticked down about 0.2% to the dark side. And all this red 2 days in a row means VIX getting a bit of a lift to end the week. Haven't seen that in a little while. Coming into showtime, VIX cash was at almost a 26.90, which puts it up about almost 2/3 of a point. It has given some of that back now. It's up to about 26.5. So it's given up almost half a point right before the start of the show here. So it's up about a quarter or so from last year, right around unch from where we were this time last week. Same deal for Spikes. Spikes was up pretty hard to start the show. It was at a 27, puts it up about 1.75 from last show. Now it's up to about 26.60 or so, which puts it up about, almost 1.5 from last show. So still up firmly. Last week was a weird week. Spikes was weirdly below VIX. We don't see that too often. And some interesting nuance. I actually chatted with Simon Ho about that during the week. I was like, what is driving this weird? Usually we see when it's dividend time lurking in the near future, we see spikes get a bit of a premium like we're seeing now. And yet, for a while there was a weird discount, and it had to do with some of the mechanics of the forthcoming dividend and SPY wreaking a little havoc out there on Spike's land. But now Spikes is back up to pretty much north of to slightly in line with VIX, which is kind of usually where we expect it to be hanging out. But up firmly from last week, up about 1.75 points. So Spikes was playing the laggard last week. This week, it's finally catching up. And our old friend VVIX, which is, of course, the vol of vol coming into showtime, was just a little bit shy. Couple of ticks shy of that benchmark we like to use, that 120 level, which we often say is that barometer for, man, north of that, things are frosty. Things are getting kind of turbulent. Got to watch out. And instead, now we're just a little bit below it. Coming into showtime, we're at about 119.75 or so. Puts it up almost 5 handles from this time last show, which, given what we've seen in the vol complex, shouldn't really surprise anybody. Vol is firm. Vol is juicy. Vol is moving enough to merit these levels, and it's been around this 120 level for a few weeks now. So that kind of shows that's kind of the baseline where we're at right now. Vol is moving. Vol has enough juice to do something. It's not quite 180 anymore, but it's not a 75 either. It's still juicy, still frothy out there. A lot to unpack, a lot to parse. Mr. Meatball, what has been catching your eye and the eyes of your crazies in your pit chat this week, sir?
Coming into Monday, I think kind of the big piece was how expensive forward values were relative to the cash market. So, when the spike futures list, if there were spike futures, they would have been trading at a giant premium to the spikes index. Similarly, the VIX index was trading at a significant discount to the August future as July was rolling off, which happened this week. And that really drove, I think, trading for the week in volatility. Some things that happened. We are seeing something that I think we've talked about a bunch. We're seeing kind of the selling of some of the mega caps, and that's being used to finance some buys in, transportation, in energy, in financials, in industrials, because a lot of those names are about the only place you can go to find any real value. In the last couple of days, we've seen Apple give away almost $30 Amazon has gotten punched. Tesla, absolutely, who's had earnings this week, absolutely blew their earnings apart, and then went ahead and sold off, right? Intel is getting punched in the face today. They didn't like Microsoft's earnings, despite the fact they were good. So I think what we're seeing is a little bit of normalization, volatility getting to where maybe needed to go. But if you were trying to hedge yourself, and we'll get to the ETPs, if you're trying to hedge yourself in the ETPs, you were not having a lot of luck because there was such a wide spread between the underlying and the future that really the futures have not made the crazy move that the cash did. And that's really been what's driven trading and kind of my view of how things are progressing on the week.
Speaking of what's driving trading, sir, your cohort, your partner in crime, your distant work wife, the Rock Lobster, he sent something in before the show. He wanted to make sure we chatted about this. It kind of brought a smile to my face because he sent me a Zero Hedge link, and I have a bit of a love and hate, mostly the latter, relationship with Zero Hedge. You know, it's interesting because on the very specific area of volatility, they sometimes highlight some interesting stuff, and then the rest of it, 98% of it, is complete and utter insane nonsense. Like you'll see a interesting piece about the VIX term structure next to some insane political conspiracy theory, which I guess what should you expect that they post under Tyler Durden? But still, this one is interesting. I should note this was a blog post from them. They're analyzing what Goldman already analyzed, so they're at least coming from a somewhat more reliable source here. But the Rock Lobster thought this was interesting. And it is kind of interesting when you think about it, because we talked about it for a while in Option Block and others, how options volume has been just off the hook by pretty much any measure. June, the most active month in options history, which, by the way, listeners, remember, I kind of gave a bit of a now scarily and eerie warning last year when people were saying, and even at the beginning of this year, people were saying, man, we need to blow the doors off of 2018. I think we could do it. The industry could do it. I remember saying very vividly on this network, careful what you wish for, because the type of calamity it will take to exceed 2018 from a volume perspective, we may not want that as a society. And sure enough, unfortunately, I was horribly correct, because that's exactly what it took to drive these types of numbers. But the folks at Goldman were crunching these numbers and looking at particularly options flow from retail investors, and what they term an unprecedented market inversion. For the first time ever, the volume of option trades surpassed that of the actual underlying, of the shares themselves. So, at least according to the Zero Hedge analysis, the derivative more liquid and more popular than the actual underlying. We have seen that in specific underlyings in the past, but now getting out to the broad options market, and certainly the amount of volume we've seen out there is pretty interesting. According to researchers at Goldman, John Marshall and Vishal Vivek, have to get them on the network to talk about this. This is kind of fascinating stuff. Single stock options volume rose to record highs in July's with notional volumes. I'm always leery about notional, but still, notional volumes up 129% year to date, 35% over the past month alone, as what they term retail investors flooded markets to this is the Zero Hedge addendum here, to blow their government stimulus checks on sure thing stocks like Tesla. So that's a little bit of the Zero Hedge analysis you can throw out the door. So the interesting charts and visuals, I encourage you to check out this research if you can, listeners. Single stock options volume currently tracking 114% of share volumes. Options trading activity by individual investors comprised 10% of volumes in large liquid names at the beginning of the year. It's up to 15%. So that's a pretty sizable increase in and of itself. That compares to a 60% increase in total single stock options contract volumes a year to date. Let's see. Individual investor activity doubled in the past year for S&P 500 stocks. For options on the S&P 500, or I should say the stocks within the S&P 500, individual investor activity is up 40% over the past year. And Goldman, they start breaking it down by term. This is straight out of Goldman here. They say the proliferation of weekly options and increased focus on using options to trade catalysts has likely boosted growth in shorter-dated options with less than 2 weeks to expiry. They put that in parentheses there. Trading strategies. While weekly maturities on single stocks became popular in 2012, volumes in short-dated options typically comprised 50 to 60% of total volume until 2017. Now, that's already a pretty huge number. And I've said it before, if you're not talking about weeklies in the equities, you're missing the story. That narrative has become even more laser-focused now. They say this changed in 2018 as the volatility spike early in the year likely led to investors increasingly trading short-dated options, driven by low absolute premiums and better visibility of the catalyst path. In 2020, volumes in short-dated options have increased to record highs, with maturities less than 2 weeks now comprising 75% of all maturities, up from 65% a year ago. So, Mark, a lot to unpack here. We could probably spend a lot of the show just on this, but I know this obviously came across the Rock Lobster's radar, and it certainly is fascinating data. It kind of puts into a little bit more context these numbers from OCC we've been throwing at the audience for a while, including what we've commented on for years now, the migration of liquidity towards the very short end of the curve and some of the interesting impacts that has on things. What are your thoughts on these numbers here coming from our friends at Zero Hedge through the lens of the Rock Lobster, sir?
Yeah, I'm not surprised by the pop in retail trading. I'm not surprised that we're breaking records with everything that's happened. Interestingly, I'll bet you equity vol is doing great. Index vol is not, which is something to think about. And I think that, the way everything has come together is very much what you might expect with what's happened, plus the wrinkle of Robinhood. And one of the things that worries me about this market is the people that I've met in my life that are younger, that never cared about financial markets, that are not asking me about financial markets. And that is a very much a counter-cyclical sign for markets, I would say. So the Goldman, they're really, it's an interesting note, but when you read it, it should not come to much of a surprise to you.
Well, it certainly is a trend we've been highlighting for a while here, that the trend is short-dated. They mention maturities. They don't mention terms of total notional volume. I want to break that down a little bit more for myself. But the trend has definitely been heading that way. Interesting that it has coalesced so aggressively in the last few months. But again, that kind of dovetails with numbers we were just talking about yesterday on TWIFO and how the huge global derivatives volume, futures and options, not just in the U.S., but across the board, has exploded. About 70-odd percent of that, 75% of that in equities. And the overall year-over-year change and impact on open interest is only up about 3%. So that just shows it's a ton of equity short-dated churn and burn that's going on out there, because they're not really materially changing the OI, even though the numbers are off the charts from a total volume perspective out here. So you guys are trading it up, listeners, I think is the short analysis for that. I think we'll come back to that probably in a little bit more detail down there. Maybe get those Goldman guys on the show to kind of pick their brains on that a little bit, because it is kind of interesting. What else is interesting? What's going on in the vol space right now? Spikes futures obviously still halted. A lot of that Spikes options OI coming off the board with July expiration. There has been a lot to parse out there this week. Let's head on out to the VIX futures instead, see what's going on. Come into Showtime. Mark, you kind of mentioned things were kind of wacky sauce, I think was your technical term. Maybe I'll put a word in your mouth, but it sounds fun. It sounds like it's a meatball term. Coming into Showtime, we saw that future. Obviously, we're not in backward territory anymore. Far cry from it. We're seeing that AUG future now, July, of course, off the board, listeners. AUG future pretty distant. This is kind of what you were just talking about with the distance to the cash there, Mark. 2.5 point premium on that AUG future coming into Showtime. SEP, you go all the way out to SEP. Remember, you're getting perilously close to that, starting to infringe upon that election premium, because now you got 4 points worth of juice to the cash. So that's pretty meaty, no matter how you want to break it down. That is a pretty large chasm between what's going on cash land and what's going on in the futures. We have a listener question about cash indices coming up in a little bit later, so we'll get to that in more detail. But Mr. Meatball, sir, you kind of touched on this on the top of the show. You said this was your most surprising development of the week. This is, I think the technical term is crazy town for how wide this chasm is between the cash and the future, sir.
Yeah, and the crazy thing is it's actually come in. It was wider at the beginning of the week. And, but it is, there is a massive, and I mean massive, headwind to any volatility ETF based on the way all of this stuff is trading. And there is, I think, all kinds of reasons to think that, markets are pricing for less movement in the way they've structured themselves, but they're still a little afraid. And the reason being is that I think that this rotation that we're seeing out of some of the big tech into industrials is going to reduce realized volatility. And, when you have a market the way it is more afraid about the future than it is what's in front of it. And so, VIX futures are kind of like, hey, we don't know what's going to happen, but we're not afraid of today and not that afraid of tomorrow. And that's a little bit of what you're seeing.
Yeah, as I said it before, I'll say it again. The answer to all your volatility questions lurking somewhere in that volatility term structure. It's not exactly clear sometimes what it's saying all the time. You have to dig a little bit into the tea leaves, but the answers do lurk out there. Let's move on out now to the volatility options front, like we mentioned here at the top of the show. A lot of the July paper coming off out there in Spikes land this week. So let's look on out here to VIX land instead. VIX, kind of a bit of an interesting beast. We've mentioned before, in a normal year, in a non-pandemic, non-civil unrest, non-lingering tensions with China and everything else that's going on type of year, this would be a very quiet period. This would be a seasonally very quiet period for all things markets, all things volatility. And the ADV was reflecting that. Coming into today's show, the ADV was threatening to break 300,000 on the last episode. It's ticked up a bit since then. We had a couple of interesting days this week. It's up about 34,000 contracts from last show. It's right around 347, just a little bit under 350,000 contracts out there. So still light. But again, it's July. It's heading into the dog days of summer. You don't expect a ton of paper on the tape. But also, we're coming off the heels of the most active month in options history. So it's that kind of year, listeners. Nothing really makes sense. Today, coming into, as of a few minutes ago, VIX not doing a heck of a lot. A little bit north of 200,000 contracts, about 207,000 to be precise. Let's break down what the hot spots are out there, the hot options. A lot of July obviously has rolled off the board now, so we're looking at all AUG and the OI. Pretty freaking light, I think is the technical term to reflect that. We're shy of 5 million contracts open in VIX land now. This is about 4.75 million contracts open. Pretty much, this is the closest I've seen it in quite some time between the calls and the puts. 2.44 million on the calls, 2.28 million open on the puts. So no market bias in either direction, at least from a net OI perspective. Let's break down the top 10 out here. Only cost you 76,000 contracts to break into the top 10 of VIX options. Listeners, that gets you to the AUG 70s. Oh yeah, our old friend, the AUG 70s, still lurking out there for not that much size, but enough to break into the top 10 today. Number 9, 85,000 of the AUG 28 puts. Number 8, 89,000 of the SEP 20 puts. I believe that is the first and only SEP on the list. Everything else is AUG, listeners. Number 7, 91,999. I just like saying that. Of the AUG 50 calls. Number 6, 95,000 of the AUG 25 puts. Number 5, 96,000 of the AUG 23 puts. Number 4, 99,000 of the AUG 24 puts. Now we finally, all the way to number 3 to break into six figures here. It's the AUG 40 calls, 106,000 of those bad boys. Then we get out to number 2 here, $1.15 of the AUG 60s. And rounding out the top VIX positions, a meager 131,000 contracts that gets you to the AUG 20 puts. So it's kind of hard to see any real bias here. It's 60-40 puts to calls. OI, no real bias either. VIX, at least from an options OI perspective and volume perspective, kind of a bit of a coin flip right now. Let's see what's lighting it up out there today. I said, wasn't a heck of a lot of paper on the tape, 207,000 contracts. The big prints going out to October. The October 25 puts doing 15,000 contracts today. That's the big dog on the tape. Then about 14,000 of the AUG 20 puts and almost 12,000 of the AUG 70 calls. Interesting, a 70 strike starting to get a little more fascination perhaps out there. Yesterday, a little bit more active of a day, 275,000 contracts on the tape. The big dog was actually pretty big this time, about 45, almost 46,000 of the AUG 20 puts. So that's probably, I'm going out on a limb and guess and say that's probably where a lot of that number one OI spot came from. Getting a good 46,000 or so on the tape yesterday. That'll do it. Followed by 17,000 of the AUG 65 calls. Interesting strike selection on the upside these days. That's kind of interesting. 70s, 65s, and both AUG and now in October as well. Let's see. And also the AUG 70s trading again on Thursday for about almost 15,000, 14,300 of those bad boys. Wednesday, even lighter paper, 192,000, hence the slow drift in OI, except for a couple of days here. 15,000 of the AUG 24 puts was the big print, followed by 14,009 of the AUG 23 puts. Going out to Tuesday. Tuesday was the big dog of the week. It's the only reason the ADV is up this week. 706,000 contracts on the tape. The big print, 32,600 of the July 24 puts, followed by 30,400 of the July 25 puts, and 30,000, pretty much even, of the July 25 calls. Obviously, all that paper going the way of the dodo, and they got 27,000 of the AUG 26 puts for the only paper that's left on our OI charts these days. Monday also decently active, 566,000 contracts on the tape out there. The big prints, 70,000. Pretty good for a day that wasn't huge, but decent paper. 70,000 of the AUG 23 puts and about 39,000 of the July 25 puts, 32,000 of the AUG 20 puts, and 30,000, almost 100, of the SEP 20 puts. Interesting, kind of weird pockets of paper out there, Mark. Somewhat near out of the money puts in AUG and a lot of upside calls in AUG and October, kind of dominating the tape this week. Anything catching your eye out there, sir, this week in VIX options land?
Yeah, just those open interest levels being so low. I mean, the SIBO has to be panicking or starting to panic. When was the last time that a VIX contract in our top 10 didn't have 100,000 in open interest? It's got to have been a while. And so the fact that the VIX is still a very busy product, but not seeing the kind of open interest that we're used to, tells me that one, the ups, they're not hedging downside risk in the same way that they were. They're now likely more using directly S&P or NASDAQ rather than hedging volatility because we've had this big move. And then two, the SIBO has to be starving for the VIX to get back to 12. So the hedgers will step in, right? There's a lot of good use cases for the VIX, but in the end, you need that baseline customer to be in there using it, trading it to create ancillary paper around it. And right now, there are a lot fewer hedgers using VIX, and that is that'll change. But with the VIX hanging around 25 and 20, 26, 27, it's not cheap to hedge. And that is why a lot of customers would rather just go directly, especially with the S&P where it is, they'd rather just go directly into the index.
What's the point you made before on the show? VIX has to reset, and it has begun that process, but it's not quite back at the levels, obviously, that we were back in January for obvious reasons. And so the VIX as a hedging of catastrophe tool has a little bit more limited utility, even at these levels. Obviously, it's below the 50 level it was not too long ago, so that was not at all really useful from a catastrophe hedging perspective. So we're well off that. It is more useful now, but clearly, as you indicated, Mark, the OI reflecting a lot of paper coming off and not a lot of paper coming in to replace that. I'm hard-pressed to think of the last time I saw a total OI number in VIX options under 5 million. It's been a while. It probably was the depths of the dog days of summer another year, maybe 2017 when nothing else was going on. I'll have to reach out to the once and future Dr. Vic. He's the keeper of all my historical data on that fun stuff. He probably knows the exact day. But it has been some time on this show where we've seen it under 5 million. Let's go on out to a product that's trading a little bit more paper. This is everyone's favorite VXX, at least the favorite to fade out there. Coming into showtime, it was getting some of its mojo back, which may not be a good thing for a lot of you out there. It was up slightly. It was up to about a 31.2, puts it up about 0.3. Of course, as we've been talking vol here, it's given up most of that again. It's back down to about a 30.5 as the show has progressed. So it's pretty much back down to right around where it was, a little bit shy of it this time last week. So couldn't keep a good index up for too long. It's back down a little bit again. Let's see what kind of paper we're seeing out there today in VXX land. Decent paper, about 151,000 contracts on the tape as of a few minutes ago. The ADV a little bit shy of 200K, now 192. So VXX feeling that seasonality out there as well. It used to be well north of 200K. It's obviously come in quite a bit out there today. Big prints out there in VXX land today. We got 9,300 of the July 31 calls and 8,500 of the July 30 puts. So, interesting mix out there. Top two positions, calls and puts. So, see, it's not all puts all the time, listeners. It's a lot of puts, but people like themselves a little bit of calls out there as well. Let's look at the top positions out there in VXX land. Maybe that'll give us a little bit of insight. Let's see, number 10, it cost you 12,800 contracts to break into the top 10 in VXX now that a lot of July has rolled off the board. That gets you to the AUG 40 calls. Number 9, about almost 13,000 of the Jan 15 puts. Number 8, 13,600 of the AUG 32s. Number 7, almost 14,000 of the AUG 25 puts. Number 6, 15,000 of the AUG 30 calls. Number 5, 16,300 of the Jan 25 calls. Also 16,300 for number 4 of the Jan 20 puts. Interesting OI there. Number 3 again, 20,000, almost even of the Jan. Jan wants to come out as July in my mouth today for some reason. Jan 22 puts. And then number 2, then we get back up to real size, which is, of course, this one put spread that's been dominating the tape forever. It's this AUG 30-22 put spread, 105,000 for the AUG 30 puts, 107,000 for the AUG 22 puts. This guy was looking good, then not so good later on in the week. Now maybe he's starting to come back his way again. Interesting to see when this guy takes this one off. He's got some time, but he's been known to roll early. He rolled a little early on the July 35 puts he had before this. So we'll see when he chooses to take this bad boy off. Or maybe the market will decide for him. Maybe we'll get another crazy move to the downside. VXX gets some juice, and next thing you know, we're back at the 35 strike, and this guy's saying coulda, shoulda, woulda to himself. Mr. Meatball, what are your crazies up to? And kind of a bit of a weird week out here in VXX, sir.
Yeah, one, I'm a little disappointed we don't have Where's Caldo intro music yet. A little disappointed.
Oh, I totally forgot about that. We'll do that next week.
So that's your assignment for next week, Mark, is Where's Caldo intro music. Then, and 2, we were watching a lot of downside vol for how much VXX moved. It's not very expensive. And you can find some pretty good value really across the board in a lot of names where they have kind of aggressively sold off, tried to sell off vol in names that are continuing to move around. We're not there yet, but precious metals, the premium has been way too cheap in SLV and GLD and some of those names. Same thing for I believe VXX. Their puts have not been very expensive.
That's a rare thing because people have been complaining for some time about how juicy they were.
Yeah, no, you can find some pretty good premium within, the first couple of weeks. They are really coming after. So I was noticing that, the 30 puts that expire next Friday really are not expensive relative to where VXX just was. And same thing with some of the premium that I've seen in even the equity. They look too cheap. So, they may have overreacted with how much volatility they're taking off given the amount of realized volatility we have.
And just to clarify for our audience, what is our rule set for Where's Caldo? Are we guessing how many calls are in the top 10? Are we guessing what the first call strike is? What are we playing for?
The first call, I believe it's the first call strike. The highest call strike.
Oh, the highest.
So,
there's a couple of different variants of the Where's Caldo game that we could play.
Yeah.
I think, which would be
so
fun.
I think it is. Is there? And if so, where is the highest one? That is how I would play.
So highest in the rankings, like number 3, number 5, or the top 10 kind of thing?
Yeah, exactly. Yep. Where does it land in the top 10?
I think we can make that happen, Liz. You guys can play along at home, too, maybe with some fun and fabulous prizes Probably digital, because it's kind of hard to ship physical goods to people right now. Poor Neil's been waiting out there for his winning thing at the end of the year for VIX, and obviously the world fell apart. It's kind of hard to ship a physical good to New South Wales. Not that I think anyone really wanted one right now, but he wants a physical item, so we're gonna, once all this stuff settles out, he'll get some sweet extra options insider swag just to make up for the delay. And since our buddy Mr. Link was on the show last week, he likes himself some short vol, let's do a quick glimpse into his favorite product. Not really mine anymore, but it's literally the last of the Mohegans these days. So if you want to trade post-TVIX, this is where you got to go, to our old friend UVXY. Come into Showtime's at about, or this part of the show at least, about a 2770, up a little bit on the day out here. We're seeing right now, as of the latter portion of the show here, 96,000 contracts on the tape. Actually pretty decent. It's starting to tick up. Go figure. TVIX going the way of the dodo. Folks starting to turn to UVXY. It's still pretty anemic, but it's decent nonetheless. Like I said, the ADV is only 70,000 contracts out there. So that's a decent amount of paper. Beating that already today. I got a feeling it's going to be ticking up. So UVXY feeling a little bit of action out there. The big prints out there in UVXY, 8,200 of the July 28 calls. I'm going to guess half of that is Dave. And then about 6,000 almost of the July 29 calls. And let's see, top positions out here in UVX line. The number one position with the bullet, a whopping 12,000 of the July, did it again, the Jan 10 puts, 12,091 of those bad boys to be precise. Then it kind of falls off a cliff from there. So the big position's not that big yet, but they're getting there. Total OI of 405,000 contracts. If this continues on this trend, I don't know, 6 months, I'd say UVXY topping VIX. What a world that would be in. Speaking of worlds, though, it's time, listeners. It's that time of the year. It's that time on the show. There's a whole bunch of stuff popping off here from an earnings volatility perspective. Remember, you guys can see all the data, crunch all the numbers for yourself, completely freaking free. That's how much we like you guys. Courtesy of our friends in ORATS land. Yes, the earnings move results, and the earnings season reports. You can see it all freshly updated as of Showtime over there at theoptionsinsider.com. Let me just give you a little taste, a little hint of the litany of names we had popping off this week. Halliburton, IBM on Monday. Coke, Snap, United Airlines, Ameritrade, Capital One, iRobot for all your Roomba lovers out there, and a bunch on Tuesday. Wednesday, NASDAQ, some tea company, Tesla, I'm not familiar with them. Microsoft and Chipotle on Wednesday. Thursday, Twitter, Telephone, a.k.a. AT&T. American Airlines, Southwest, Intel. I think what did Mark say at the beginning of the show? Intel getting punched in the face. What was the analogy you used for that? Sam Adams, E-Trade, Skechers, all sorts of stuff. And today, Verizon and Amex out there. So let's get to some of the ones we have here before we got the results reports before we get into some of the big ones coming up next week. It's a big week next week as well. We had Southwest Airlines popping off before the bell yesterday. At the time of this report, they were at a 33.30. That's where the stock was going into the earnings, listeners. And at the time of this report, the stock was at 32.34, so it was off about $1. They priced in about a 4.6% move, and they delivered about a 3% move. So a little bit of underperformance from Southwest Airlines. Let's see, Twitter out there, they closed at 36.94. They were popping off before the bell yesterday as well. And at the time of this report, they were trading 39.06. They were pricing in 9.3%. They delivered 5.7% from an overall vol perspective. So two light ones in a row. Let's go to Softy. Let's see if we can make it 3 for 3. Actually, I think the answer is yes. Let's see. 211.75 is where they went into their earnings. At the time of this report, they were trading 207.75. So straight shot to the dark side there, $4. They were pricing in 4.5%. They delivered 1.9%. So I was joking before this. Microsoft used to be the most reliable premium right in the business. These days, it didn't seem like that was going to be the case, but this time it held up out there, which is kind of surprising, kind of interesting. We have a bunch of other of those earnings move results reports you can check out for yourselves there, listeners. Let's go ahead to look ahead a little bit to the season and the week that is coming up, because there's a lot of big bad boys coming up next week. We got JetBlue, we've got McDonald's, we got eBay and Starbucks just on Tuesday. Let's go to JetBlue. They just announced their big alliance with American Airlines. They were at 10.62 going into this report. They were pricing in $1.07, and in the past they moved 44 cents. So now in the earnings reports they give you dollar values for the straddles, and the results reports, they give you percent volatility. So it's just a little bit of a change of notation there to be aware of. McDonald's, $198.62 at the time of this report. They're pricing in $6.02. In the past, they've delivered $4.96. So a little bit of extra juice on Mickey D's out there. They just announced this morning they're requiring masks as well. Everyone getting on the mask train out there. eBay, $56.34. In the past, they've moved $2.93, and they're pricing in $3.72 this time. Let's go out to good old S-Bucks. Another one used to be out in our old pit there. In the IBM pit, actually. It was the other product out there with Starbucks. 77.25 at the time of this report. They were pricing in $3.11. In the past, they moved $2.87. So a little bit extra juice on Starbucks. CME, our friends across the street there, quite literally across the river, $170.31 is what they were pricing in at the time of this report. That's what they're trading. The price they were pricing in from their straddle, $5.66. In the past, they've moved $3.11. So a little bit of vol, actually quite a bit of vol being priced in on CME land. Wednesday, let's see, Facebook, a name a few of you may have heard of out here. Facebook was at $239.87. They were pricing in $16.05. That sounds juicy, particularly when you compare it to what they've moved in the past, $14.41. So a little bit of extra juice on Facebook. Let's see, Spotify. You guys like them too. $289.62. Wow, Spotify is getting rich. $25.48 is what they were pricing in. In the past, they've moved, get this, listeners, $16.48. So Spotify, rich on the stock and super juicy on the earnings straddle. To a couple others here. PayPal, $178.42. They were pricing in $10.71. In the past, they moved $9.72. So a good extra buck worth of juice. Qualcomm, $92.60 is where they were trading. $4.67 is where the straddle was trading. $2.94 is what they've moved in the past. So extra juice. Let's get to Thursday. That's the big day a lot of you are waiting for. There's some fruit company out there. Apple, I think is how it's pronounced. $389.09 is what they were at the time of this report. That just sounds insane to say out loud. Just how long ago was it we were talking about selling those July 150 puts? It wasn't that long ago, and a lion's share of you in the audience did not want to do it. I understood it. I understood why. And now here we are, over double that. This is the world we live in, listeners. They were pricing in $17.91 in that at-the-money straddle. In the past, they've delivered $15.58. So extra juice for Apple out there. The Googs. Take your pick, the Goog or the Goog-L. Let's go, just for fun, let's go Goog. $15.68.49 is where they closed time of this report. $74.10 was the straddle they were pricing in. In the past, they've moved $72.64. If you go out to the Goog-Ls, a.k.a. the alphabet, then it's a little bit juicier. It's $77.78. And in the past, they've moved 71. So a little bit extra premium on the Goog-L. Probably makes a little bit of sense. Let's see what else we've got out here. We've got Amazon, $3,099.91. It's another one hard to say with a straight face. They were pricing in a straddle of $209.38. Listeners, in the past, they've delivered, get this, $144.81. So a whopping $60+ of extra juice on that straddle. That's, I think the technical term is pretty juicy. Let's get out of tech. Let's round it out with a silly one. Let's go out to WWE. If Uncle Mike was here, that'd be his favorite name. $45.93 time of this report. Man, that one's rich as well. They were threatening 30 to the dark side not too long ago when all that WrestleMania kerfuffle was happening. Let's see. They're pricing in $3.83. In the past, they've moved $3.45. So a little bit extra juice in WWE land as well. They're all testing positive for corona. Maybe that's why that juice is priced in the way it is. Wow, a lot to unpack here. Mark, we can go for hours on that. You guys can check it out for yourselves, theoptionsinsider.com. But it is that time of year, Mr. Meatball. I know you're crazies in your pit chat when they're not slinging some VIX and some VXX and indeed some spikes. They like to look at themselves at some single name earnings vol. Anything catching their eye this week, sir?
Yeah, I think Tesla, the turnaround Tesla, and then the big move in Intel was really what caught our eye, and then some of the what appears to be pre-selling ahead of Apple. I mean, every single name that's had a huge run up got punched. There was not a lot of reward for having good earnings. In tech names, some of the industrials, some of the names where we maybe weren't expecting anything great, they got rewarded, but that's about it. And that's, I think that is kind of telling of how trading's been as a whole over the last few weeks, is that everything is so disjointed because of the work from home trade, the Corona trade. You call it whatever you want, but it is definitely a very unique market that is producing earnings where you don't get rewarded for good earnings. You get rewarded for ahead of earnings, or you get rewarded for not having bad earnings, but having a future.
Yes, you will survive post-pandemic. Here's your boost. You mentioned the dreaded T word, the Tesla. So we have to check in on this. This was our just ridiculous trade of the week, the year, call it what you will, yesterday. We have to check in on these bad boys, see if they made good. These are the July, expiring today, 24th, 3,500 calls that went up for size this week in Tesla. There are currently 23,876 of these nonsensical monstrosities open right now, listeners. And spoiler alert, Tesla didn't get there. 1,432.5 is where it is right now, off $80.50 out there. Of course, we talked about this on the option block yesterday. It seemed like someone had some risk to the upside they had to hedge, and they were willing to do it to the tune of 24,000 contracts. I guess by selling all these 2,000s and 2,500s, it looks like 2,800s are open for size here too, selling all that upside premium. They got enough juice to merit spending the ridiculous premium levels, $140 some of these went up for, these Tesla July 3,500. These are interesting and or insane. Yet another sign of where we are in the markets right now, listeners, and where we are in the show. It's time for you guys. It is time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to your segment, the Vol Voicemail. Kick it off, chiming in from our cohort last week, Mr. Dave Lincoln. He chimed in to say the VIX term structure is really getting to extremes here. Yeah, it is, Dave. We touched on it at the top of the show. I think he sent this in earlier this week when it was even crazier out there. But yeah, it is. I think he's changed his handle again. Now he's Perma Beer Show. I can't keep track of the myriad handles he has over there on Twitter. But yes, it is getting crazy out there. Let's get out here to a real question. This one came from Facebook. We somehow missed this one. I apologize. This one came out, I think, like a few weeks ago or a month ago. Somehow we missed it. For some reason, we don't get a ton of questions on Facebook. We get a ton on every other outlet. For whatever reason, you guys don't live on Facebook a lot. I don't know what it is. So maybe that's why we missed this one. So I apologize here, Trong Hai Jean Nguyen. I apologize for butchering your name as well. But he writes in, hello, Marky Mark. Go Longo, and a bunch of exclamation points. Well, okay. You already got my attention here, Trong Hai. I love the show. Never miss an episode. Keep up the great work. Well, we will. Thank you very much. He said, just wanted to get your thoughts on the efficacy and utility of the cash VIX term structure. Good day for pronunciation for me out there today. Long broadcast week this week, listeners. The futures term structure obviously receives much more attention. So why not so much for the VIX cash term structure? Would love feedback from the option pit boys, Simon Ho and Dr. VIX as well. Cheers, mate. Well, cheers back to you, Trong. Sorry you made you wait so long to answer your question. Next time you hit us up, we like Facebook, but we missed it, obviously. So hit us up on the other outlets. We'll get it even faster. And he first sent this in. I was like, VIX cash term structure. What is this guy smoking? There's only one VIX cash. But then I realized kind of what he actually meant by it. VIX cash is obviously VIX. That's a singular definition. It's like saying Apple term structure. There's a singular Apple stock and where it is trading. But there are other flavors, other variants of VIX, and that's clearly what he's alluding to out there. We don't talk about them a lot, as you reference here, Trong. But let's do it right now. So I'm assuming you mean by this, Trong, you mean the 9-day flavor, which I actually crunched some of the numbers for you before the show. So coming into the show, we had the VIX 9-day was at a 25.25. Then, of course, VIX itself, the mothership, the actual VIX cash, 27.28. Then we got the 3-month flavor, the 3-month variant out there, which was at a 31.44. So you can see how that term structure, as you put it, is progressing. Then the 6-month VIX flavor, which was at a 32.39, kicking off the show. And then the old 1-year VIX 1Y, which we don't never talk about these on the show, 30.90. So you can see there that election blip is baked in there as well. And Mark, this is an interesting one because he asked, why is there not a lot of attention? I think the answer is kind of clear. There's not a lot of information baked in here that is somehow dissimilar from the VIX. Everything that's here you can see in the VIX future. I saw some people talking about, well, if you talk VIX cash term structure, you can use it as this technical indicator when this month's over this month. You can do that with the future. And the futures are an actual, real, tradable product. I'd much rather sink my teeth and my analysis than something that has real dollars behind it, as opposed to the little bit more abstract VIX, which we all know can have some intricacies to its calculation. But Mark, this is an interesting question, just from a theoretical basis. Is as he puts it, the VIX cash term structure something you ever pay attention to? And if you do, why?
You know what? It's not a huge thing that I look at. It can give you some information in terms of, I'm interested in hedging directly in the S&P. Where are those values? But I can get that just by, if I care enough to look at VXV or VXMD or some of these longer dated vols, I'm just going to go pull up SPX and look at the option. The nice thing about the VIX is it's kind of a catch-all. It gives us kind of all the information in one spot, plus the term structure. You have a pretty good idea of where everything is in general. That being said, I think that there are definitely people who watch these and use them. I know our friend Dr. VIX loves these indices for some very, very personal reasons. But I think that, like you said, unless you have something very specific with a very important axe to grind, I don't think you get a lot out of it.
I'm trying to think of the audience for this. Outside of Trong here, clearly is gung-ho for it, and maybe the once and future Dr. VIX. I mean, this is someone who has to be savvy enough to know that there are other flavors, other variants of VIX, aside from the titular VIX cash, and savvy enough to be able to go and construct this term structure like we did at the start of the show here, but is not, for whatever reason, savvy enough or interested enough to want to go look at the VIX futures term structure, or as you mentioned, some of the implied vols coming out of the S&P. It's a weird kind of gray area. I'm not sure if it exists to any large size, which is probably why it doesn't get a lot of play, which is probably why we don't talk about it. I'd much rather look at the futures, or like you mentioned, the S&P options implieds. But these are interesting. It's a good theoretical question. That's why we like you guys. You guys throw us curveballs. We love it. Interesting stuff. Good question. I promise you we'll get your questions answered faster next time. Trong, now it's time for us to do that most dangerous, most delicate of dances. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball. Listeners, a portion of the show where we attempt to wrestle with that slippery pig known as vol. Let me see if I can update my quotes. I got VIX 1 year on my screen now, courtesy of Trong here. Thank you very much there. Let's go back to regular VIX. There we go. All right. And last week on the show, we had Mr. Short Vol, ironically, not being the shortest of them all. Actually, the meatball was the shortest of them all, literally and figuratively, at 25 and a quarter. And then Mr. Short Vol was at 27 even. I was at a little bit higher, 28.35. Was looking all right until it wasn't. And let's see. Coming into the end of the show here, VIX just ticking up 25.99. Oh, so close. That puts Mr. Meatball within a buck, though. And let's see about the spikes. Our old friend, the spikes, is at a 26.13. So he's within a buck on those both. Now, on the spikes side, Dave is also within a buck. Dave is obviously 87 cents. So Dave's Tell you what, since you're closer on VIX and spikes, I will give it to you, Mr. Meatball. So I will allow you to choose. We have no guests this week. It is just you and I. You want to go first, or do you want to go last after the big dog goes? What do you want to do?
Well, the nice thing is that I'm not in, I don't have to worry about somebody carping me I'm going to go. I think we have another similar week to what we see this week, where we probably do give away a little bit on VIX. What was I, 25 last week? 20.
You were 25.
All right. And I'm going to go 24.
How did I know you're going to do something like that out there? All right. So, yeah, you're feeling a little bit of that fade. I can't argue with you. Even this week, we've had a sell-off to end the week 2 days in a row, and we're starting to see VIX come in a little bit. It's gotten a little bit of its juice back. But still, overall, an interesting, weird week. Again, these numbers at the tail end of the week. I know I've been saying this for a little while. I hate to keep beating the same drum, and I don't want to fight the tape. The market obviously has the bull has the bit in its teeth, and you don't want to get in the way of that. But there are just so many lingering other shoes out there that we keep talking about and that seem, for whatever reason, not to be having an impact until they do. And it's very sudden when they do. And it's kind of apropos of nothing else when they suddenly decide to have an impact. We're in that weird kind of time, listeners. I'm gonna go out on a limb, yet again, risky fellow that I am, and say some of those other shoes are going to make themselves known towards the latter portion of the week, like they did this week again. Maybe we'll have some cooler, calmer, saner heads prevail on the weekend, maybe even later today. And we'll see vol kind of steady to lower to start off the week. But towards the end of the week, I think we'll get back up there. I'm not stocking crazy hefty 35 or anything, or 50, anything like that. I'm going to say back up around close to where I was, a little bit shy of that. I'm going to say 27, dancing between quarter and 1. I'm going to say 27.1. Now I'll change it. 27 and a quarter. I like that better. 27 and a quarter on the upside for me. Mr. Meatball, a clear almost 3 handles away. 3.01 at a 24 and a quarter. What is your guess? What do you guys feel for next week? Hit us up. Let us know. Maybe if you have some good ones, we'll include a few listeners there in the old crystal ball. All right. Unfortunately, listeners, that music means we've come to the end. To yet another historic volatility journey. Oh, what a journey it was. We talked the futures. We talked the options. We talked even a little bit of UVXY snuck in there. Talked some VXX. Talked the whole freaking boatload of earnings vol. A lot more of that coming. So if you like that stuff, stay tuned for that. We talked about what the heck is going on with options volume and inversions to the weeklies and how that impacts things like volatility. And of course, we talked about the VIX cash quote-unquote term structure out there. So a lot of good stuff. But before we go, let's go back around the horn. Mr. Meatball, if folks have questions about any of those topics we talked about today, where should they go? What should they do?
You know what? Head to optionpit.com and sign up for all our newsletters and information. And we can't wait to teach and educate you on all the amazing things we do at Option Pit.
Let them teach and educate you. OptionPit.com is the place to go. Free grammar lessons are included with every webinar, listeners. And of course, check out our friends over there in Spikes Land, MyAxeOptions.com/Spikes. That's the place where you can go to get these cool Spikes quotes like I was just talking about, as well as, of course, historical data, as well as you have some questions about the methodology, how it all works. It's all there. You can even get a link to a cool show called Volatility Views, so if for some reason you're not subscribed elsewhere, you can get it right there as well. And on behalf of the Meatball and our friends in MyXland and myself, I thank all of you out there for downloading, for streaming, for subscribing, for taking time out of your busy trading day to listen to us live. We love you all. And we'll see you back here on Monday for the option block and then all the way through again to Friday for more Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest options platforms in the world. MyAx is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.myaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.